Here you are, Rebecca.
Yeah, I was wondering if I meant to do anything.
Okay, look, great. I think it's started recording now. So yeah, let's get started. Yeah, thanks so much, Rebecca, for joining us. This is, I think, our third episode in the Mara and Friends series. And yeah, what we like to do is really just platform some of the friends of the firm, advisors just like you, who we think are doing really great things and could be of value to our wider network. So yeah, thanks again for joining. Perhaps you can give a brief overview of yourself, like your firm, Flourish Partners, and yeah, I think then I'll talk a little bit about briefly how we work together, and then we can dive into some of the content about emerging managers and setting up funds. But yeah, over to you for a brief intro.
Sounds good. Thanks so much for the invite and really excited to talk about this topic. I geek out on this stuff and it's some information that's really inaccessible for a lot of emerging fund managers.
Mm,
And I think it's super important because it helps kind of shape the backbone of everything they're doing, not only for the first fund, but fund two, three, four, and beyond. So I'm super excited to kind of get into this topic. A bit more about me and Flourish Partners. So Flourish Partners, we've been going for just over a year now. We've worked with about 13 funds across Europe, Middle East, and Africa. The initial kind of thesis was working with those funds going from 0 to 1 and maybe scaling their operations to 2 and 3, kind of like the sub 4 funds. And what I found in the last year or so is that kind of 0 to 1, getting the fund launch, all of those core operational stuff, working with and understanding the whole landscape of all the providers in this space. Um, Launching a fund is made up of a web of so many different
mm,
parts. There's the licensing part, there's the legal part, there's the actual fund structuring part and where to put the fund. There is also the actual reporting side of things and how you want to do that, whether you want to use a fund admin, whether you want to try and do that internally. So there's a whole host of things that go into it, and it's quite fragmented. I think in either kind of lower regulatory environments like the US, when you're launching kind of a sub 500 million fund, you can pretty much be up and going. That's why you see AngelList doing so
mm,
well with acquiring a bunch of fund managers. But in the UK and Europe and much of the rest of the world, you have to have quite a strong regulatory wrapping around how you do things. And so that creates a bit of fragmentation. And so getting the funds from 0 to 1, getting them institutional ready so they can kind of look their LPs in the face and talk to the strength of their operations. That's why I've been spending some time getting them DD ready, data rooms, etc. And I guess Flourish Partners really started from my time while I was at Local Globe, which is a venture capital fund in the UK. At the time when I was there, I joined when we were raising 500 million across 4 different strategies. So Local Globe is the most prominent one, which is a pre-CC stage fund, but we actually have a number of different strategies from Series B to pre-IPO and beyond. And then there was a fund of fund called Basecamp, which has been some of the first LPs in a lot of more established funds that you recognize today. Airtree, USV in the US. If you go back 20 years when the founders were doing it from their pockets, they were early investors in Andreessen Fund One. And so there's a mass portfolio of 80 funds. Seed Camp was co-founded from Basecamp as well. And again, I used to spend a lot of time with those GPs as they were kind of launching their fund. I've been in private markets for 17 years. I headed up the finance and operations for a FTSE 250 private equity fund, and have set up launched funds in many different jurisdictions as well as having a legal and finance background. And so I find myself being super energized with working with those funds as I kind of navigate this space. Um, and so yeah, that's pretty much where I spend a lot of my time. We also do fractional CFO work. We do portfolio work to keep the costs down, but also give the GPs that kind of expertise that they need, and be, real partners as they're going through this fundraise journey.
All right, nice. Good to hear. And yeah, for the audience, just a bit of context. So we often tag team with Rebecca on our mutual clients. Mara, since we do, specialize in SPVs, we're often used by emerging managers to do some early deals, build some track record. And then, we like to use this term like warehousing as a strategy, where one, I think that track record can be used to leapfrog into, launching a fund, but, we often can transfer these assets into that fund in the future. So yeah, we can talk a little bit about that in the future. But yeah, I really liked what you were saying about the energy of emerging managers, your passion for that. Like, yeah, we see that a lot with Mara. Personally, when I was at Cambridge Associates, we used to look a lot at emerging managers, niche managers. My boss she used to say, you have to kiss a lot of frogs to find, like the good ones out there. So it kind of implies a little bit of risk, but that energy is quite infectious with a lot of these groups. And yeah, there's some good data about outperformance with emerging managers if you back the right groups. But coming with that, I think that operational infrastructure is just really essential, right? I think, the team's organic, but you really do have to have um, that right infrastructure in place. Could you maybe talk a little bit about how you touched upon it just with the types of service providers, but how might, one even just like navigate that space? Have you got any tips on that?
Yeah, so it is very much a minefield, I think. And I think what usually happens is eventually, as you know, they've decided they've got a GP typically has a really strong thesis. They may or may not have a strong record of angel investing, but they might have had an exit and been like a senior operator at a startup that's done really well and they've seen so much and they've learned so much. And now in a particular sector, whether it be fintech, health, AI, what have you, they have such unique insight that they actually want to back more of these types of founders. And so maybe amongst their colleagues or their network, they're able to pull together a bit of capital for them to then go and invest into maybe write larger checks or be a bit more disciplined in how they write it, right? And so going from being an investor and operator to a fund manager is such a complete it's different, right? You're actually managing a fund for a long period of time. And so the bar of what the expectation of how you manage that fund is just different, depending on who you're raising your capital from. And so what typically happens is you obviously talk to a few of your buddies who have, maybe stumbled their way through launching a fund. And the first thing they always need to do is, if they want to raise external capital, market the fund, is to be licensed to do that. And if you're in the UK, you'll be FCA licensed. If you're, depending on where you're actually focusing on raising capital from or actually investing, you need to be licensed to do that. So that's probably one of the first things that happens. You'll look for, and when I say license, more practically, you look for a principal firm to which you can kind of piggyback off their umbrella,
Mm.
which is they would be licensed with the FCA themselves. And so that allows you, once you've been onboarded with them and been approved as a appointed representative, as that's what they call it, you can then, manage other people's money effectively, and you so call it arranging, or you can market your fund. And so I feel like that's the first thing people try to figure out, because you can't typically, for a first fund, when you're a leaner team, it's quite capital intensive to get licensed. You would go down this route because it can be a lot quicker. To get licensed by the FCA could take 6,
Yeah, yeah, absolutely.
right? And so if you actually want to get off the ground a lot sooner than that, because maybe there's some companies you want to go into, you would then leverage off the umbrella. So what usually happens, they do that as a step one, and then the A firm will say, um, what's your legal structure? Where are you going to be doing the majority of your investments? How are you set up? And then you'll be like, oh, probably need a lawyer. So then you go to a law firm and then you'll start talking about where to domicile. Because then in the back of your mind, you're like, where do I want to put my carry? Where am I going to be earning my carry? Am I actually going to be in the UK? Do I want to be somewhere else? And then you're like, okay, I need to talk to a taxes officer. And so kind of the web starts to unwind that way. And then, I mean, the tip there, I would say, is actually speak to someone who has done this and who actually focuses on launching first time funds and also appreciates the size of the fund that you're going to be raising. So if you're raising, 10, 15 million fund, 2% management fees, they're still going to be quite capital constrained in what you can do, as opposed to some maybe larger private equity houses who out the gate are coming out with 150 million fund. So you need to speak to providers who are kind of empathetic to the size of the stage that you're at and can give you adequate advice, i.e., how to simplify your structure to make sure it's just as simple as possible GPLP structure. Don't overcomplicate things in terms of domiciling here, there, everywhere, to keep it quite lean. And also it just helps with how you describe your structure to LPs. Some of them will get nervous if you're in a jurisdiction they're not comfortable with or they've never seen before, or they might get nervous with you, trying to lean away from a typical GPLP structure. So I think those are usually law firms, myself obviously, the people who have done it in this space, those operational people, as opposed to other investors, I would say,
Yeah,
um,
sure.
can just give you like a bit more of a flavor and also like narrow down the scope of all the providers you need to speak to. Trying to talk to like 10 different law firms, it's just going to burn you out and it's just not going to be helpful if you can again narrow it down to who are actually focused on emerging fund managers in the jurisdiction you want to raise in and just talk to those guys. And they will usually have quite a good flywheel of you should speak to this A firm, you should speak to this fund admin, and you can kind of connect the dots that way.
Cool. But I guess like they can accelerate that journey. You would project manage a lot of that. You cut that, you navigate through that minefield.
Yeah,
Yeah, okay.
the way I work, in particular, and because I do just focus in this space, is um, I would always choose what's best for the GP in terms of what their overarching goal is, and then narrow down the providers. So I've had really good experience with a bunch of providers in the UK, in Cayman Islands, in the US, Singapore, the Middle East, etc. So I can kind of be that first layer of these are the people that I've spoken to. This is usually the price points, and we can look at the landscape of what to expect. And then internally again, even just looking at the legals, like what are the heads of terms of your fund LPA, and we can agree on that from your own perspective before engaging in lawyers. And then we can also look at your pipeline of LPs, where are most of them domiciled and where are most of them going to likely want you to be domiciled, i.e. if you're raising from EIF, they might want you in Luxembourg. If you raise from the BBB, they will want you in the UK. And so thinking about where we're actually going to domicile and kind of sticking to that at least until you get the momentum in closing some of those LPs. But yeah, I would pretty much own that kind of outsource provider relationship, which takes away a lot of the kind of pain points in, sewing all the different pieces together.
Yeah, got it. I often think like we talked about cheat codes before. Like fund managers often they do incubate, new managers
Mm.
as well, like where they've got established full scope AIF licenses, etc.
Yeah.
Is that? Would you advise on doing that, or are there some drawbacks, with going under established fund managers?
So what I usually see is and hopefully I don't get in trouble for saying this, but in general, you got to think about it. So having a umbrella or being a principal firm carries a lot of risk for that firm because you're effectively saying, this fund is operating under my oversight, right? And if that fund ends up doing something rogue, then they're the ones that are going to get in trouble because they've not actually effectively done that oversight. So it's a lot of risk to have a fund under your umbrella. And so because of that, a lot of these umbrella firms obviously focus on mitigating risk and
Mm,
compliance. Like that's what they exist for, right? But they're not necessarily going to be the one to say, this is your fund model. When you're talking to this LP, it makes sense that you explain reserves, or it makes sense that you are able to explain your follow-on strategy, or these are how many checks you're going to be writing to pre-CC stage fund. That's not what they're there for. They're there for the compliance side. So whilst you might not see the value or appreciate the value, they are providing you with a license to go market your fund. And that's typically what they do. And then you have the fund admin who do kind of your bookkeeping for the fund, and will help you kind of close the fund depending on the fund admin, because there's a whole world of different types of offerings with fund administration. But that is what they're there to do, fund administration. So they'll do the close, they'll do the capital calls, they will obviously do the reporting, etc. And hopefully you get a really good one that you can kind of triage. But that whole middle piece of everything else, so like managing a fund, speaking to law firms, speaking to your LPs, I mean, like real life questions, um, looking at your actual budgeting strategy for your fund. Not those two are not going to be doing that. And so you get this in between gap of frustration where you actually, as a GP, need to figure all of this stuff out, either yourself or with support from a CFO or someone that's done it before. So back to answer your question, practically, you do need an umbrella because it allows you to kind of get your fund up and running a lot quicker and a lot leaner. Otherwise, you're going to have to hire some additional people in the team who can
Mm.
actually help you get through the licensing process. But manage your own expectations. You might not necessarily see the value or appreciate the value in what they're doing for you, because they're expensive as well, right? You pay them a fixed cost for however long you're under the umbrella, and you might not see the day-to-day of what they're doing, because it is very much compliance FCA focused as opposed to helping you manage your fund focus, right? But
Yeah,
then
yeah, got it.
there's the second layer. So those are the umbrella guys, but there's also, when you say incubators, there are a few, probably two.
Yeah, there's like venture funds. I know sometimes they're established VC funds and they help other like new
Yes.
VCs get to market.
Yeah, so there are a few that do that. Not many. I could probably think less than five in the UK that do it. I think they're great. For the most part, you do have to be super careful in terms of the terms. So if they're taking a portion of your GP, if that makes sense for you, like in terms of getting working capital in, and maybe you don't feel like you will be able to get up and running without it, then it definitely makes sense. But you also got to think about, again, if you're raising franchise funds and you're kind of giving away a portion of your business super early, what that could look like to other LPs down the line, right?
Mm.
So yeah, I do see the value in some of them, but some, it depends on how aggressive the terms are. I wouldn't be recommending that as a straight
Mm.
out of the gate. And now we do have like quite a few interesting things coming out of the UK and Europe. So there's the BBB. They've just launched their 400 million pathway funds, to go into emerging managers and diverse teams. So, and they will cornerstone will put up at least 50% of your fund. There's the Invest in Women's Task Force, who also have I think it was a 200 million that they're putting into first time fund. And these are actual capital into the fund. So they're not looking at taking a portion of your GP. So, I probably err towards that side, as opposed to, it depends. It depends. Some of them are really good when they're not aggressive with the terms, like taking a portion of your carry, taking a portion of your GP. Um,
Yeah, got it. Okay.
depend.
Understood. So yeah, by the way, guys, for those listening in, do post some questions in the Q&A and I can read some out. But until then, jurisdiction is something I get asked a lot, just from some of the emerging managers we worked with. Um, be good to hear your thoughts on what's good. Like from what we see, Netherlands has some, advantages over, say, Luxembourg, because you get that EU footprint, but it's a lot cheaper than Luxembourg, but there's often some tax considerations, which not a lot of people have expertise in, but it is fundamentally important. And then there's kind of offshore jurisdictions like BVI, Cayman, can enable really quick setups, but probably in terms of attracting that institutional capital, it may have some implications. So yeah, I think jurisdiction probably, how I think about it is cost, reputation, tax. Could you talk a little bit about how you think about that as well in terms of advising emerging managers?
Yeah, and I will caveat, I'm not a lawyer or a tax advisor, but I've definitely launched funds in multiple jurisdictions. I used to work for KPMG and I spent some time in Bermuda, and so launching funds in Bermuda and Cayman was quite typical. So I've had good oversight of all the kind of jurisdictions. So with domestic, like where you want to launch a fund. And I think as a first kind of step is thinking about who you're going to be raising from. So, for example, usually if you set up in the US, it's very cheap and it's very quick. And there's so many platforms and fund administrators that it's so. I think the delta on cost between that and any other jurisdiction is like night and day. You could probably save about 50% of the first fund to set up in the US. But then what you are going to face is the fact that most of your LPs and your investments need to be in the US. So if you're actually trying to be a global fund and actually make more investments in Europe, maybe you want to invest in Asia or Africa, what have you, then you're quite restricted in that way.
Mm.
Yeah, it just depends on, I think the main thing is where are you going to be investing and who are your investors? If you expect to have mostly US investors and mostly be invested in the US, then obviously I think in terms of, looking at structure wise for the fund itself, not for the GP, then that's a good consideration. And then everything else comes down to your LPs. So for example, if you are raising mostly from Europe, maybe you're in conversations with EIF and they will favor Luxembourg. And I'll go back a step. One, you want to make sure that the jurisdiction you pick isn't on any grey or blacklist. Because if they have been, it's going to be very difficult to get LPs to on board with that jurisdiction. Like jurisdiction is a real techie point for a lot of LPs. Some of them can't even put money in certain jurisdictions, so you do have to really consider that. So obviously like Delaware, the UK, Channel Islands, Luxembourg, they've never been on any kind of, I mean, they typically are, safe bets in terms of jurisdiction. Luxembourg for Europe. And so, yeah, first, where you're going to raise and where you're going to invest, that will kind of narrow it down. And then the second layer is looking at the cost. So I think setting up in Luxembourg is at a premium. So Luxembourg is not cheap. It has a really strong infrastructure. It's set up for launching funds. So the same as Bermuda and the Cayman Islands. Like those jurisdictions are really like the financial services industry is a large contributor to their GDP, and that's how they can continue to exist. So they have like law firms, they have accountants, they have all the kind of infrastructure that you will need to kind of set up and go to market, if you like. But it does come at a premium. You have to pay for local directors, which some people don't realize. Because again, if you're going to set up in the Cayman Islands, you're going to need someone in the Cayman Islands to actually sign off on everything, basically. So you'll need local directors, and they will take fees. I've always thought that as a retirement gig, I'll just go retire one of these jurisdictions and be a director to a bunch of funds because it's actually quite lucrative. But yeah, so it is quite expensive. And then the other thing that a lot of GPs look at is where their carry is going to be domiciled, which is important, obviously. But I don't think it should be like the main reason why you do certain things, because at the end of the day, for your first fund, obviously, yes, carry is you want to obviously invest in some great companies and have access to carry, but at the same time, it is your first fund, and so you want to err on the side of making this fund a success and making sure you can onboard and bring LPs on the journey. So I think that those are the more important things than to worry about the Okay. But also in the UK, we've just had the budget, and it didn't come up as one of the things that they're going to slap additional tax on. And so I feel like we have a bit more clarity in terms of what's happening with carry in the UK, I think. Um, but yeah, so there's also the Channel Islands as well. So obviously the Channel Islands, Jersey, Guernsey, that's where there's no tax. So if you had your carrier vehicle set up in one of those jurisdictions or the whole fund, I think those are also jurisdictions that LPs are quite comfortable with. Guernsey is actually one of the largest jurisdictions for fund setups in amongst all the jurisdictions, which is quite interesting. And again, that it's actually set up to do that. So they have really good fund admins, law firms, etc. So yeah, it is a minefield, but I think coming down to practical things like where you're raising, who you're raising from, where you're going to be investing, what's the budget that we have to actually set up this fund. If you're a small fund, like sub 50 million, some of these jurisdictions are going to be out of your range, I think. And if you're based in the UK, it might just be easier just to, at least that first fund, do everything in the UK, just to make your life
Mm.
easier.
Yeah, got it. And I guess a lot. We work with some emerging managers. Sometimes they choose too soon about jurisdiction, but you're saying really you need to just wait to see what your LPs say, right? Don't spend money on legals. Don't choose that jurisdiction, but just have like the term sheet there, and let those discussions guide you. Is kind of what you're saying.
Yeah, I ideally, so it's like a chicken and egg situation. You want to look like you are ready to go, right?
Mm,
So if you understand that you're going to be in the UK, you don't have to have these companies all incorporated and all of the legals done, but you might have something that illustrates like this is my typical
sure.
structure. This is typical fund structure. These are the owners. This is where we're going to be domiciled. You can skeleton that out, but yeah, I agree. You should before you kind of put pen to paper for everything, you want to be led by who is your most progressed LP conversation. So again, if it's between EIF and BBB, and the EIF are like, we're going to write you a check, but you need to be in Luxembourg, then you might end up just being in Luxembourg. If it's a BBB and they're like, we're going to write you a check, but you have to be in the UK, then there's no point in you setting up your docs in the US because they're just not going to do it.
Yeah, sure. I hear EIF are a bit more flexible on that Luxembourg point now. I think they're open to Netherlands as well now, another jurisdiction. That's something we've seen.
Yeah, that's it. Haven't really come across any too many fans in the Netherlands. So that I mean that'd be an interesting one to kind of learn a bit more about.
Yeah, okay, great. And then let's talk a little bit about due diligence on service providers. Like, what's your tips for actually like selecting these groups? Because they're all quite commoditized service. There's thousands of firms, within each. So how do you go about thinking about that?
Definitely, I think especially in VC for emerging managers, there is this referral flywheel is ever present. They people like to say the UK is not very collegiate. I agree for the most part, but in this space, it is very, I think in venture in general, in the UK was quite a collegiate space. And so you will get the same names kind of flying up every so often and the experiences that some of your other GPs have had. So I would definitely do that, see how everyone else, there's all these like groups and networks and what have you, to see what everyone else is kind of who they're using, what their experience has been. Or again, if you have a really strong relationship with your A firm or with your law firm, they will also recommend some providers in their space. So yeah, definitely, ask around, get shortlists. That should be your kind of starting point. And in terms of diligence in them, I mean, if you're a law firm that's been around for a long time, I think for most GPs, the most set thing they're sensitive around is the price. And I would say, obviously, the price is important, but it's more important that the law firm is able to kind of work with you, not just for your first fund, but second, third, fourth fund. And so some of these law firms have really good relationships with LPs and kind of can look around corners and what to expect in terms of terms that come through. And so, and also there's like the professional liabilities and etc. So you're going to have to go with quite an established law firm. I have seen some challenger, people have come out and start broken out, similar to myself, and are doing it in a two-person band. And I think that works, but they will always go to a larger firm to kind of sign off just because of the liability cap. But you have to kind of think about price and the relationship. But yeah, sorry. So just to go back in terms of like the diligence and then use your network as the first point, take referrals as the second point, look at prices as a third point, but don't be wholly led by the price point. Make sure that they can actually deliver on the service that you need. And then, again, like once you kind of shorted it down, I think it's super important, especially for if you're kind of doing it by yourself or doing it with, doing it quite scrappy with you and a colleague, or you're kind of going to market pretty much by yourself as a solo GP, and you want to kind of own the whole process, then you need to have access to the people who say they're going to help you. Because if you are trying to reach out to your lawyer and ask them a really, important point that maybe one of your LPs have asked you, and you don't get a response for 2, 3 days, I mean, that's going to get boring very quickly. So
Hmm.
you want to make sure you have access to the people that have actually promised to deliver you on that service. The same with fund admin. Like if they've got, some of these larger fund admins, they're such large teams and they're used to working with such large private equity funds who are, at that point, billions in AUM. And so now the thing that they've promised you as a sub 50 million fund or sub 100 million fund, are you actually getting it? Are they just palming you off on the B team? Like when shit hits the fan and you go through diligence with your LPs, can you accelerate and get what you need fast enough? I think that's so important because it can hold up your whole process if you can't even get access to your fund admin to confirm the KYC for an LP. And it just makes the experience for you and for your LP very frustrating. So like really look at the human to human interaction and how quickly they are responding to you. I think that will tell you everything that you need to. You can go with someone that's cheaper and then just be dealing with a headache. And that's honestly changing fund admins is one of the most frustrating and expensive processes that you will go to. And I see it happen so often, and it's a shame. So definitely above everything else, like figure out that whole human to human interaction and make sure you're getting the service you deserve.
And because a lot of the groups we know with even they forget to set like service level agreements, and they're also quite hard. When you're in that sort of dynamic, you're thinking about just sort of speed of getting things set up. But how about like setting up SLA service level agreements? Any tips on what to focus on and like how to actually put them in place?
So I would say take yourself outside of the SLA first and like actually focus on the key things that you need
Mm.
and the minimum kind of viable support that you need, whether it's in the legal or the fund admin side or whatever. So like what do you actually need? I need, if it's fund admin, I need investor reporting, I need KYC, I need XYZ, right? And once you have that, don't be led by the documents first. Be led by this kind of heads of term. Speak to the provider and get as much clarity on the price as you possibly can. Because what I really get frustrated with is like they will say, this is going to be 30K, we're going to get you up and running, no problem. And then you're like, well, I've got 20 or 30 LPs. And then for each 30 LP, every time you do a capital call, you're going to get charged on every single one of these. Every time you do a KYC, you're going to get charged per LP, per call. That stuff adds up very, very quickly. And I find that such I think such a shame, especially when they know that for smaller, leaner funds, that the capital constraint is going to be like a thing, right? And it's a big drag on their TVPI and their DPI when you have all these racked up costs. So I can't take the lack of transparency when it comes to cost. So definitely have your menu of things that you need, get them to agree a set price. And I feel like we're in a stage where there are so many different competitors, you can be quite firm on that. Like, this is how much we want to pay, this is what you're agreeing to. And at least for the first fund, on say up my first 30 LPs, this is our fixed cost. Because I think there's so many in the SLAs, it can look so convoluted, it's so complex,
Mm.
and you just don't know what you're getting, and you don't know what your final cost is going to be. I remember I looked at one SLA with a fund admin. They had quoted a GP 45 grand, but by the time I'd gone through the docs and added everything up, it was 90,000.
Oh
So
my
I was
God,
like,
I hate that as well. That's like the biggest bugbear when there's this like shopping list of
right.
items. Like you really need that one. You kind of get why they do it, just because they will need to cover themselves from the work. But it's kind of what we do is we just put a price, really simple, clear. And then if there's more work, we'll take the hit. If there's less work, then we benefit. But yeah, that is just the biggest bugbear which we have when we've, purchased services. And we see it a lot, yeah, especially in the fund admin space.
Yeah. Yeah, but I think those are more those headlines and agreeing on what they're going to deliver, that human interaction, a fixed cost if you as fixed as possible and as transparent as possible, um, before even getting into the weeds of these SLAs.
Yeah, sure thing. So we got two questions coming in from Luba and Drago. But I wanted to quickly just talk about warehousing because that's something which we've tag teamed up on. In terms of like the practical process, can you demystify it a little bit and then talk about what kind of terms GPs can set with warehousing? Like, is it no fees when they do get rolled into the fund, or is there discounts, stuff like that? So maybe a bit about the process first, and then what kind of terms, groups should set.
Yeah, so I've seen SPVs set up for a bunch of GPs before they actually go and raise their fund. And if anything, it's quite a clever and neat way to build up your track record before you actually go and raise a whole pool of capital. So if you have, two or three, four or five family offices. Maybe there's a company that you are super excited about, and you've got a really close relationship with the founders, and you definitely want to back them. But you're still going through the whole dance with your LPs, which is going to be a much longer journey. But if you've got two or three who have the capital and they want to come in quite early, and you have the company, it makes sense for you to not necessarily wait until you have a close. You might want to warehouse this asset. And so what happens is you get a wraparound around this single asset with your small group of LPs. And again, it's to so now you have an asset that you can actually talk to. You can say, this is part of my
Mm,
track. And if you want, you can then roll that asset into the fund if you want. Not necessarily always the case. But process wise is obviously getting your LPs. There are some platforms that exist. But obviously, I've worked with you guys on a couple of these assets where you're able to kind of get the legals together, the movement of cash, because again, you don't want to be on the hook for collecting money. That's a regulated activity, so you've got to be really careful about taking other people's money and investing it into a company. But when you use a provider like you guys, we're able to kind of take custody over that asset and hold that asset, safeguard it, do all the legal documents, file all the shareholder agreements with I think you share the share register, having that, so having the actual audit trail of what's happened with those the shareholder or the participants of that SPV before deciding what to do with it after. And then typically in terms of terms, so not not to be controversial, but typically you wouldn't charge a management fee for that because it's just the one asset. It's not like you're managing a bunch of different assets. It's usually one asset at a time. And it also incentivizes the people coming in. So say you're talking to a family office, you're like, I've got this great company, we can get access to it from SPV, there's only going to be a few of us, I'm not going to charge you a management fee. If you then come into the fund, maybe this forms part of your first close, as will roll it in, etc. I think that comes quite compelling to that family office. What you would charge maybe is the administration, because there's always an admin cost to get these SPVs, one, up and running, and two, if you need to report on it as well. So you might charge for just the administration cost. And then the upside for you will be on the upside of the asset when it actually exits. So you'll take carry, you agree to a percentage of carry. And again, it might be lower than what you would do for a fund. So maybe not 20%, maybe it's 15%. The idea is to obviously get the asset, get the track record, and start that kind of longer term relationship with that family office, whoever's coming in. So you just got to kind of weigh it up. But I think these are really nice, neat ways to kind of build up your track record and get into some companies that you're really excited about. And then when you do go to do a first close, so what we would have done in the past, and yeah, we do it all the time. We do it with directs, and maybe they're not raising, maybe it's secondaries that we're getting access to, and the fund is at capacity, so you might want to warehouse these assets separately. But if you might say, for example, the company has then, in between the time you've gone in the SPV, and it's actually gone to do a round before you've closed the fund. So now the value of that asset is actually increased. So now you can actually have a day one gain in your fund if you wanted to. You could transfer it at cost and have a day one gain, and maybe equalize the people that have come in, or you can set it at the higher valuation. But I mean, I think typically you put it at cost and then take the day one gain into your fund, which is always always a great sign or a positive sign for how the direction of the fund could go in the future.
Mm. Yeah, got it. I've actually personally invested in like one fund, yeah, because they let me in at cost, and then yeah, you had that upside which came after. So yeah, I think it's just a good fundraising strategy as well, and not too complicated to execute. Particularly with all the challenges with emerging managers, if you can offer something like a seeded portfolio just to alleviate perceptions of risk, I think it's yeah, I think I one friendly advice to emerging managers, I always say, do that sort of warehousing strategy rather than just go out with a blind pool to pitch the fund.
Yeah, and I
Uh,
think with you guys, it's pretty much within a couple of days, you can kind of get all of the subscription agreements and the share registers and all the legals signed and everything.
yeah,
It's
yeah,
not,
exactly. We can move quickly, and then we'll just work with the fund administrator when the fund's up and ground to transfer the assets over.
yeah.
But cool. So yeah, let's look at some of the questions now. Luba asks for SEIS, EIS funds. I'm not sure if you've got experience there, but any advice on setting up SEIS, EIS funds versus a three layer fund structure, especially
God.
with the view of recent budget updates on carry?
I'm sorry, Luba, that's definitely not my area of expertise, I'm afraid.
Got it. Okay. And then Drago's got su any suggestions for basic IT system beyond CRM?
Oh yeah, lots. Lots. I'm pretty sure I've tested every single product that. So if it's for particularly for CRM, um, I'm actually quite a big fan of Folk. It's super cheap, but it's not. I don't think it's not going to cover the whole thing for the fund. It's literally just pure CRM, collecting and managing your database, so getting people from LinkedIn, sending out mail shots, etc. I think in terms of sophisticated ones for actual GPs, the one you'll find coming up a lot is Affinity, which is actually really, really, really good. It pretty much does the whole end to end for you, and that one gets referenced a lot. It's obviously not the cheapest, but it does. Track your portfolio companies, tracking your conversations with your GPs and your LPs, obviously working with team members. So that's probably one of the best ones. And then the other ones is here or there. So those are probably the two. If you just want a quick one at the gate, then Folk, and that's cheap. It's like $300 for the year. But Affinity is a bit more sophisticated and will do a lot more. And also for your own compliance, which is also good if you're getting inbounds. You can also track the kind of what we call reverse solicitation. So if people are asking for your access, your data room, as opposed to you pushing, then that's it. That's a neat way to kind of manage that and give it to your AFM if they ask.
Yeah, cool. How do you spell it? FOLK? Like focus in people or?
Oh yes, FOLK.
Oh, cool. I'll check it out. I haven't heard of it. We use HubSpot personally, but I think we need something a bit more tailored to funds, private markets, and investments generally. But cool. Thanks for that insight. Does anyone have any more questions, or otherwise we'll leave it there. I'll give people 5 seconds to type something. But if not, thanks so much, Rebecca. This was really great. Um, yeah, people can get in touch with you on LinkedIn, I guess. Your name's here. We'll also share like a recording and distribute that over LinkedIn as well. But any final comments, or should we leave it there?
I mean, I could give a final comment. If anyone is kind of yeah, I mean, I haven't really ever set up a CIS, EIS fund, but I can definitely, I know funds who have done it. I'll just have to check my CRM. Maybe that's helpful. I can ping them across to you. Um, but yeah, if anyone is in the process of raising a fund and just wants a friendly voice, to maybe ask about different providers, maybe access to templates or what have you, I'm always happy to help and kind of direct in that way. So yeah, just connect with me on LinkedIn and drop me a DM, and you can always try to be as helpful as possible.
Cool. Yeah, we highly recommend Rebecca. She's great. We love working with her. And thanks for dialing in and for your time, Rebecca. And no doubt we'll chat soon.
Yeah, awesome. Thanks for inviting me. Really enjoy the conversation.
Yeah, thanks everyone for dialing in. Enjoy evenings. Bye bye.